Hi, I'm Bram. You're watching Buy and Hold Fundamentals, where you get to watch me analyze 20 buy and hold rental properties every single day. A very initial and shallow analysis. On weekends, I do weekly summaries and I dive into some of the concepts that I'm dealing with during the week. But today we are continuing to look at properties in Carmel, Indiana, so let's get going. As usual, we're picking up the address and sticking that in our analysis sheet. We're keeping a running tally of all of the properties we've been looking at. This is useful for stats. It allows us to draw conclusions. For instance, one of the conclusions we drew was when we started looking at Carmel, we were assuming a 1% rent ratio, which after looking at a bunch of properties, a little over, I think 140, 160 properties, we came to the conclusion that the average rent ratio was in fact somewhere closer to 75, 77%. And I'm not actually using that. What I'm using is it's not 77, it's 0.77% as opposed to 1%. And what I'm actually using is less than that. I'm using the median rent ratio, which is closer to 65, or rather 0.65% of the purchase price. So that's what I've done here. I've taken the purchase price and multiplied that by 0.65% to get the estimated rent ratio, or the estimated scheduled income for the rent that we're getting off the property. The only thing we now need to do is go back and grab some information on taxes. That's as good as 14,000, and what we get is a loss of 1,082, and minus 1,082 minus 3%. Not exactly a screaming good deal. Oop. There we go. And we're on to the next one. Not surprising, you're not really going to find fantastic buy and hold properties in a neighborhood full of mansions. But it's part of the town. It's good to know that they're there. It might cause you to conclude that there's no point in investing in Carmel. We don't know that yet. We've looked at 222 properties in Carmel at the moment, which is not enough to draw those conclusions. Apparently, Carmel is large enough to have both mansions and more regular houses. And I think at the moment the available stock, at the moment the available houses are something around 600, so we're about a third of the way through. Let's see what we got on taxes. 15,000, and that's 1174 minus 1174. What? Minus 3. And we're off to the next one. Grab the address, stick that in here, and grab the asking price, stick that in there. Figure the rent ratio. Well, we know the rent ratio. Figure out what the rent is according to our assumed rent ratio. And there you have it, 12,000 and change. And we stick all of that in our analysis tab of the sheet. We're just missing tax info. 29,000. And we're losing 2,300. Minus 23, 4. That's not right. Minus 0.5. That's more like it. And that's a lot. That's not interesting. And when I say lose, I mean that you have a negative cash flow. So you'd have to, besides buying the place, you'd have to invest 2,300 a month just to stay even. And there we go. Let's just call that 2 million. And that's going to give us 13,000 in rent. And I don't know about you guys, but what interests me in buy and hold real estate is two things. It's a place to create wealth through leverage, and a place to create a positive monthly cash flow. 1684. And to be quite frank, even if these were cash flowing, I'm not sure that I'd want to sink my money into a $2 million property. I'd probably prefer having multiple properties. At least I'm not interested in sinking my money into a $2 million single family residence. There we go. Grab the price. And back to our trusty calculator. And we're off to our analysis tab. Doing our usual thing. What's next? Taxes are next. 19 and a quarter. And losing 1508 and 4%. Minus 1508 minus 4. And we're looking at the next one. That was a piece of land we said, right? Here we go. Right, that's enough. Now we're going to calculate the rent. That's going to be 10,000. Hold on. I'm going to put that in here too. And we're going to go over here, stick the price over there, enter the rent, and go back and check on taxes. 13,000 rather. Okay, and we're losing 1,053, 3%. And we're ready for the next one. That's a piece of land. That's a piece of land. That's a lot. What's this? That's a lot. And that's a lot. Okay. We're not looking for lots. Yep. Just by the lack of roads, it looks expensive. Right. Oh, yeah. I wonder when we start getting to the non-fancy part of town. Because so far, the west side's pretty damn fancy. No, that's gotta take a 0 off of that. That's more like it. Okay. Let's see what this gives us. I think this might be our loss leader. 18,525. And we still gotta pick up tax info, which sure, $49,000. And we're losing 388. 6% minus 3882 minus 6%. And we're off to the next one. Started over there. Now we're looking at these modest abodes. Okay, a mere million and a bit. And that gives us 11,375. And we're going to go over here. And there. 11,375. Go back for tax info. 13,200, let's call that. And we're actually making money. That's interesting. 1177. 1177. And we are at a positive 4%. Very interesting. Okay. Let's look at this one. So used to looking at properties that cost money. Because there's no way that that's right. Hold on, let's 11.75. Okay. And that explains it. Right? I got the rent ratio wrong. And I got that wrong. That's the real rent, which if we stick that in here, that's more like it. Negative 1066. Negative 1066 minus 3%. Okay, I knew that was fishy. $8,450. And let's do that one. No. Oh, that's one. And what do we say? Yeah. Oop, there we go. Let's grab that. Okay. No, that's 1, 3, oh, 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 oh. That's more like it. And what are we doing for taxes? We are paying $18.50. And that's gonna lose you $1,500. $14.95. 14.95, and yeah, 5%. Next. Okay. Winter wood. Okay, stick that over here. And we want, that's more like it. Not like that up here. And that's gonna come out as $7,150 in rent. $7,150, and we're gonna go back for taxes. $15,000. 1223, 5%. Minus 1223 minus 5%, and we're off to the next one. There we go. That goes over there. We grab this. That goes over here. 7, 3, 9, 48. Let's see what that gives us. No. What's going on? Okay, that's one. Okay, very strange. Back here. Over here. That's gonna be 48. And now we gotta go back for tax info. What's that giving us? We're not getting any, so we're inferring 1% of the property value, and we're losing 628, 4%. The reason I infer a 1% tax, a property tax, is because that's what I'm seeing is more or less the rough norm for this location. And if that's wrong, we can always fix that should we choose to do a specific analysis of that that area. All right, let's see what we've got now. Stick that in there. Anything on taxes? Probably not, because it's new construction. Nope. So we'll infer percent, which gives us 4,500. Losing 410. 4% minus 410 minus 4%. Okay. Address in there. Price over here. And $37. Okay, off to analysis. 37. That's gonna give us 5750, and we're losing 505, 4%. There we go. Next. We stick that in here. We grab the price. Multiply that by our 0.65, 542, 3523. Okay. That's gonna be 20 in taxes, losing 481. And that's those done with. Okay, grab the price, put that in there, and let's see what that gives us. $55.25. 55.25. Back for taxes. Not getting any because it's new construction. I'm gonna call that 8,500. Losing 707. Now, yeah, that's not gonna change unless we're looking at real taxes because we're inferring all of the rest. Let's go over here. $800,000. What's 800 give us? 5,200. And we do that, and we. What the hell? There we go. And then we do this. And we check for taxes, even though it's probably not going to have any. Nope. And for a percent. And we're losing 670. And surprise, surprise, 4%. Next, let's do this guy. Address over here. Back for the price. Stick that in there. And taxes? Just for, nope. Okay, so we're set. 7 500 at 0.65 gives us 455. Well, we already know it's going to be negative 4%. Right, this is going to be 7,000 minus 4, 560, 597 minus 597 minus 4%. Off to the next one. Okay. Right, taxes? Tax? Nope. Okay, let's see what we get here. 850. It's going to give us 5,525. And guess what? It's going to be negative 4%. 5,525. 8.5. In taxes, and you're losing 707 and 4%. Next. Frenzel Parkway. Nice clean million. That's gonna give us 6,500 in rent. Let's hold on. We're here. Taxes? Nope. Not a problem. 6,500. 10,000 and 4%. It's like clockwork. Minus 817 minus 4%. Okay. And the last one for today is going to be this guy. Grab that, stick it in here. Is this might actually be a real place with some history to it. Okay, how much are we doing on rent? 37. Okay, and what about taxes? Oh, we gotta look at this, guys. There's actual tax history. Let's call that, and let's stick the price in here, and let's stick the rent over here, and let's see what we get. Minus 504 and 4%. 504. Okay. Well, that's another 20 houses. I'm Brom. You've been watching Buy and Hold Fundamentals. I'll be back tomorrow to look at another 20. Bye.